Hey guys, Boris Lassberg. Welcome to our BK Forex, to our daily Forex technicals for 5/2/13. As always, trading foreign exchange on margin carries high level risk may not be suitable for all investors. So I invite you to read this disclaimer very, very carefully, understand all the risks associated with trading foreign exchange on margin. The title today is Will Euro Dollar Turn? Because, of course, tomorrow we have the ECB meeting and Euro becomes the absolute critical trade of the day. Let me just, this is the Aussie chart, but I'm just going to change it to Euro just for a second. We'll start with the Euro, of course, as always, and then we'll go on from there. The Euro today kind of did a flame out at the 32.40 level. If you look at this on a daily basis, you can see the flame out much more. And this is worrying because basically what happened was there was a big rejection of the 32.50 level, and if you interpret that as a rejection of that particular level by the bears, suggests that we may be in the midst of a pretty severe turn here, right back to the 30.50s in the euro, especially if tomorrow ECB gives us any kind of prodding, or doesn't give us any kind of prodding actually, and that pushes us towards a lower level. So for now, technicals are kind of telegraphing a possible turn in the trade, all the way down to the 30.50s, maybe even down to the 30.100 if there's some particularly bad news tomorrow. Generally, ECB meetings tend to be very, very volatile, so it would be a surprise if there would be no volatility. See how this particular level here, the rejection at 36, then communicated a big turn. This was actually the start of a massive turn in the euro, of course. I'm not saying this is the exact same thing, but there's a lot of parallels here, and that's why it's worth watching, and that's why it's worth respecting this turn to the downside as a signal that the bears kind of have pushed the limit, or sold the highs and pushed the bear back and rejected it. Dollar yen, on the other hand, is slowly but surely sinking towards 97 level. This level has been a big support for the last 3 days, and so far the bulls have just pretty much been able to repel any kind of a move to the downside. Having had today's QE meeting, which basically said QE forever, regardless of whatever the FOMC said, it basically continued its very, very large bond buying program. It feels like there is very little, and having the very negative U.S. data continue to surprise to the downside, feels like there's little to prop it up here. 97.50 turns the trade into a much more positive posture. It kind of removes the downside pressure. But if you're looking at it right now, there is a tremendous amount of downside pressure. 97 is a key support level. That gets given. The next level is 96.50. Now 95.50, 96, 95.50 is the value proposition in dollar yen where the bulls bought the first time. So I do think we'll definitely have some sort of a support level at this point. But for right now, the path of resistance seems to be downside and clearly pushing us through the 97s. If we put 97 gives way, it looks like 96.50 comes into view as a possible trade. Aussie had a massive turn today also. That was a very, very interesting trade. This completely, I think, took a lot of people by surprise. The fact that you had all of this, set up for a nice big move. We took out the 103.75s. It was sort of all geared up, ready to go to 104s, and then just complete and total rejection. Basically, an engulfing of almost 2 days worth of data. We took out the lows of here, took out the lows of here. Now kind of hanging around. This 102.50 level is a very strong support level, right? So that's been a shelf since the beginning of April, and therefore I think if that gets given, that's going to be, I think at very least the bulls are going to put up some sort of a battle between 225, 102.50 as a possible support level. We may even be able to base just around here and make a little bit of a higher low and try to make another run back up to the 103s. But the near-term picture definitely looks like a sell the rally mode, because basically today's action just completely negated all of this pent-up upside momentum and turned everything all the way to the downside. A break of the 102.50s to the 102.25s opens up a fresh new target of 101.50, which was the value proposition like around the beginning of March when they scooped it up very fast, and that was the lead to a much bigger rally that lasted for about a month and a half. This looks like it could be a move right back to test the double bottom over here that we set up in March. Lastly, cable is kind of hanging, but also the 5600 did not hold. Now, it was a small rejection of 5600, not a large one, and you sort of, the price action in cable has been like pierce the top, come back, pierce the top, come back, pierce the top, come back, and you're definitely building a very, very strong upside trade here. Tomorrow we have PMI construction, not a big event, but if that kind of is disappointing, they may push us a little bit lower. Support levels in cable are 5550, 5500, and then the much bigger support level is 5450. If that was a big turn back in cable, a big retrace to the downside, then that would be the most natural support level here in cable. Upside, if we do take out the 5600, that does open up the run towards the 5650s, but we are getting very tired. This has been a long rally on a dailies, and the levels are starting to get rejected here at the highs. So possible small correction here could be very feasible. Lastly, if you guys remember, I talked about Aussie CAD last few days, and Aussie CAD broke the 104.50, which was a big support level, continues to the downside. This is a function of the weakness in the Aussie. Aussie now coming in, as I said, to the 102.50 level, which is a big support level, and Aussie CAD, if you look at it over here, has a big support level about 100 points down at 102.50. So it's very possible that maybe 103 will be the bottoming here on a possible higher, higher double bottom in the Aussie CAD. But that trade actually was a very interesting look last few days, I pointed out, as you had the weakness in the Aussie and the strength in the CAD really driving it to the downside. So that's kind of how things shape up. Tomorrow it's all about ECB, all about euros, and to go back to the euro, I just think it's really important to look at the levels here. Very positive ECB structure would take out the 3250s. If we take out 3250s, it's open game, and we could go all the way up to 34 if we have something very surprising and positively stimulant out of ECB. If we have a negative reaction to the ECB meeting, this is clearly a turn, and right now it looks like a turn, a rejection of 3150, and then a move down to the 3100s and possibly even 3050, not out of the question given it's ECB day, and we have a lot of volatility our way. So that's kind of how things shape up. As always, trading foreign exchange on margin carries high level risk, and I invite you to read the disclaimer very carefully and understand all the risks associated with trading foreign exchange. This is Boris Schlossberg for BK Forex, over and out.